Lalbhai is joining us now to talk about Arvind Limited, and of course we'll also talk to him about Anup Engineering that is also making waves. But first, let's talk about Arvind. Punit, good afternoon. Thank you so much for your time. It appears to be a slightly softish quarter this time round. Talk to us about what are the factors which were at play. Your profitability is down on a yearly basis. EBITDA is flat. Revenue is down 10%. Were there any one-offs at play, or what exactly went by this quarter?
No, I would disagree with that
Okay.
that assessment. I think it was a reasonably good quarter considering the market conditions. If you look at last year first half, it was an all-time high of post-COVID buying. So, a comparative is not representative of the actual situation. This was the first quarter in 5 quarters where we've shown a marginal growth sequentially, and our profitability has also jumped up quite significantly from quarter one. So what we were always been maintaining in our guidance is that Q2 would be better than Q1, which we have achieved. So on the profitability side, last year there were some tax write-backs and there was some extraordinary income also booked in the last year's Q2. Which is why the comparable is not looking as favorable.
Fair point.
But I would say it's a good.
Let me clarify it then. Essentially, it appears to be a soft quarter. Last year's same quarter's profit were elevated in the first place, and then even on the revenues, it had a huge buying after the COVID. So hence, it's the normalization needs to be done before seeing it. Operationally, it was a good quarter. Talk to us about sure, Punit. At this run rate, because the industry has a lot of tailwinds, talk to us about how the exit for the year looks like.
So we expect the second half of the year to be better than the first half, which we've been maintaining. I think the bottoming out of the demand situation has happened, and there is a slight recovery in some of the markets that we are operating in. It remains a very challenging demand environment because there is bad news across the world on multiple fronts. Certain Western economies still grappling with inflation, wars happening all across many geographies. So that's not a great environment for discretionary spending. Yet I think one major trend is that brands are now done with their inventory correction. So the post-inventory correction buying should go up, and that's why we should see a much better H2 than H1.
Okay, fair point. That's something interesting. Punit, the street is quite excited about the other end of your business as well, the engineering end of the business, Anup Engineering. Good numbers over there. Which are the segments which are driving growth on that end of the business?
So I think there is an excellent capital investment cycle that India finds itself in. And that cycle is likely to remain for the next couple of years. So we are likely to see a lot of new infrastructure projects, especially in the oil and gas and petrochemical space, which is the main driver for our growth. Also globally, with oil at 90 and looking to go beyond, the petrochemical demand is going to look robust. So we are at about 30. We should end this year at around 30% export, 70% domestic, and the prognosis for orders going forward is excellent. We have a very healthy order book, almost 875 crores of pending orders, which augurs well for next year's order book as well.
You've done what? 140 crore on revenue with almost 22% margin, expanded margin this quarter, and 22 crore of profitability. With this improved outlook and your capacities also coming on stream, how does the next 2 to 3 year picture look like? Any aspirational target which you have set for the company internally?
So we are looking to maintain a 20% plus margin across 3 years and grow aggressively at the same time. So 25 to 30% growth should be easily possible given this capex cycle. And meanwhile, we are also expanding the capability set so that when the capex cycle turns, we have many avenues to continue to maintain growth post that. But I think for the next 2 to 3 years, we see this capex cycle continuing, and this 25 to 30% growth very, very possible to achieve.
All right, Punit, we'll let you go on that one. Thanks so much and good luck for all your businesses.